Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, with no leads from the US market due to the closure on Monday in observance of the US Labor Day, the market is now attempting to recover some of its momentum as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, has retreated from its fresh 20-year highs posted yesterday around 110.23 and is currently sitting around 109.70. Looking ahead, every first Tuesday at the beginning of each month, the Reserve Bank of Australia holds its monetary policy meeting, an announcement, along with Governor Lowry's statement at 2:30. The RBA is expected to raise interest rates today, as the market is expecting a 50 base point rate hike, which would take the cash rate from 1.85% to 2.35%. Besides the RBA, eyes look to this week to Australia's GDP. Along with that, we also have the ECB rate decision, and the RBA Governor Lowry and also the US Fed Powell will give speeches. Looking at the current technical pattern, the market is attempting to recover, and we would need to see a close above 68.65, and if so, would give further scope to the upside to around 69 to 70 cents as a potential target. However, like we saw back here on Friday, a rejection from that top side will give some concern that the market has failed once again, and then all eyes will turn back to that space seen at 66, 80, 90 area, which was rejected back here in 11th July. Looking at the euro, well, the dragonfly doji that was posted overnight, the market is waiting to get further confirmation. A close above 99.80 would see a further rally, and that is towards 100.6575, a key level. When the break there will give further scope up towards 102 to 103, but there is still that downtrend that emanates, which is still considered as a key level from the top side around 114, and it is very strong, as you can see here. So there's still a lot of work to do on the upside. Along with that, we do need to see the dollar index tumble beneath 109. Let's take one step at a time and see, first of all, if this dragonfly doji can produce enough momentum to clear 99.80. As I mentioned, all eyes look towards the ECB this week, and it is expected the ECB will raise interest rates by 75 basis points from 0.50 to 1.25% on Thursday at 10:15 p.m. Sydney time. So that's another major event to keep an eye on this week. Looking back to dollar yen, when we were last trading around these levels, somewhere around 140 to 143, back in 1990 or the late 90s, the Bank of Japan conducted an intervention on instructions from the Ministry of Finance. It is expected that we could see a repeat episode if we do climb in towards this region, anywhere from 141 to 143. But still keep in mind, if we don't see that, then 146 could be on the cards. However, with the monetary policy gap between the Bank of Japan and also the US Federal Reserve is expected to widen when the US Federal Reserve meets on the 21st of September with an expected 50 or 75 base point rate hike from the US Central Bank. Nevertheless, the market will be a little bit jittery and we could see a retreat, but we do need to see a break of 139.70 to support at least a pullback to 137.5. The posted hammer has followed on by further momentum today for sterling, as the market now looks towards 115.80.90 as a potential target. We did briefly look there this morning, but not enough to support a bullish case as of yet. However, the New York close above 115.80.90 could give further scope up towards 116, 117, or even up to 118. So it is a key point to keep an eye on that 115.80.90 close in New York tomorrow morning, and if so, could further give the bulls a possible rally. There is no trend at the moment from the ADX, although as I mentioned yesterday, it was overheating. We were extremely oversold, so this rebound or rally is warranted. Looking at the price action for gold, the market is taking the challenge to the upside, but we still need to get confirmation from a close of 1,719. if seen, would give the further call to 1,726 onto 1,733 to 38 to 42 to 44. So again, all eyes on that top side, and a close above 1,719 could give further upside potential. But with all these targets being mentioned, we still need to see the dollar index close beneath 109 to revert back to a bearish case and also indicate that it has peaked after hitting fresh 20-year highs, as I mentioned, at 110.23. Wrapping up with all, well, the inverted hammer has produced a slightly bullish case, but we do need to keep an eye on these technicals. I would like to see a little bit more firmness out of the RSI to give the call to $91 a barrel, but I feel there is still room to capture that challenge towards that region and reassess. Well, that wraps it for today. Thank you very much for joining me, and as always, keep an eye out on the ECNTRADE report. I hope you enjoy the rest of the day.